Andrew, we're getting another reminder today of the dislocation between gilts, yields up again, 10 basis points on the front end here in the UK, 312 currently, and the pressure on the pound. And the pressure continues, 115 on sterling, 115.35. What is your assessment of the financial risks within the UK? Are we facing potentially a currency crisis here in the UK?
Well, I wouldn't say currency crisis, but I do think that the UK is in a uniquely difficult and challenging economic situation, even relative to the situations in the US or Europe or China. I think the UK is facing a negative supply shock in the form of Brexit and the aftermath of Brexit that's independent of the energy shock that's hitting it alongside Europe, alongside risks to growth from broader monetary policy tightening. And so, if we think about the pricing of UK assets, especially fixed income assets, UK bonds still, even after this increase, still have some of the lowest real interest rates in the world. And so, the question is that reasonable? Is that a reasonable risk premium given those other challenges facing the economy? I think it's very reasonable to think no, that the risk premium in UK assets needs to be higher because of the supply shock risk from Brexit, because of the economic risks, because of the risks we know are heading towards the consumer. So I think that's still a bad UK asset story. Now, UK equities, because they're somewhat inversely correlated with the currency, could do better on a currency hedge basis. But, pound lower and gilt yields higher are the way that we think the risks are skewed.